Hey, has that Jacksonville Metro North Florida housing bubble burst? Well, that's what we're looking at. We're going to track these numbers to see what happens like we do every week. Hey, I'm in week 33 now of my series Bubble Watch. That's where we look at the real numbers to see what's going on, not just the scary headlines. Hey, I may show you some of those scary headlines, but I'm going to show you the real numbers in the back end of my MLS, where we look at what's active on the market right now for sale. We look at what's pending. We look at everything that's under contract here in this last week. We also look at what's been sold, look at new construction numbers, look at what foreclosures are, what houses are under foreclosure that are in the active settings. We cover a lot, interest rates, even share a house of the week, where we look at the numbers and see how the people did when they sold it. Hey, we're going to get to all this in 3. Hey, I'm Tom Kerr, and I'm your host of this show, Bubble Watch. That's right, that's where I go in to take you into the back end of my MLS, which is the multiple listing services that I account. You see, I'm just a regular guy up here in North Florida, but I happen to be a real estate agent, so I have access to an MLS system. And that's what I share with you on a weekly basis. We look at those real numbers, what's really happening. Don't make nothing up. Some people don't like the numbers, but they are what they are. But I know one thing they don't like. They don't like my opinion, and I give some of that too as we go along. Hey, I get a lot of calls from folks, and actually this week, I think because Santa finally went back to the North Pole, things have picked up. It's been pretty active. People calling from all over the country asking about relocating here to North Florida and just asking about the market in general. And if you're interested in using me as your agent to help you with relocating here, buying, or if you happen to live here and looking to sell, then just give me a call at this number you see here, or shoot me a text, or send me an email below. Hey, let's get started now to look back into this MLS and see what these settings are. Oh, and by the way, this show here today of Bubble Watch is going to be my last show for 2022. Yep, I'm going to continue doing it through 2023 until we see what happens with this market, and who knows how long we'll be doing this. So let's go now and look at those active listings as we usually start off with. Okay, let's go hit the active button, and what do we come up with? 6,796. Okay, we go 1 week back now to see how many have sold. And we have 409. How many are in the contingent taking backup status? 466. How many went pending this last week? 370. Now the contingent taking backup is the ones that are under contract, and they're not in a pending status, but they're under contract. In the pending, they're under contract, but it's just a different status. So we usually like to look at both those numbers combined now to see how many people are actually under contract, in this MLS system. All right, let's go finish those numbers. All right, next we look at withdrawn. And these are folks that have withdrew their listings, basically taken them off the market. There's 69. And what that is that they're still under a listing agreement, but they've just temporarily taken it off and they're not showing the house. And it could be for fixing repairs, or some people did it for the holidays. And we'll see if that number's changed from last week, and that may give us some of that holiday indication. All right, now let's look at the expired. These are the ones that are no longer under a listing agreement, and they've let their numbers expire. That's 175. I didn't mean not their numbers expire, and let the house listing expire. All right, let's look at those new homes now. Let's go down here and we'll check off the new construction box and check for sold in the last 7 days. That number, let's see, why aren't we seeing? Oh, got to click the sold button. 143. And we want to see now how many new construction homes are active. 1,834. Okay, now we go and take a look in the foreclosure umbrella. Now this is one that I forgot to do in the beginning last week, and it's kind of easy to miss. But what I do is I put, these are ones that are in foreclosure status, pre-foreclosure, short sales. I just combine them all together, and we put them and we see how many of those they're in the active. Okay, so these are actively for sale right now under the status of foreclosure, pre-foreclosure, or short sale. And let's take a look and see what they showed. Okay, under the foreclosed, there were 17, or there are 17. For pre-foreclosures, we have 14, and short sales comes up at 9. Okay, now I take all those numbers and I put them into an Excel spreadsheet that I, export from the MLS, and then I clean it up and straighten it up so that I can tally all these numbers and put everything in a nice chart, different charts where we show everything from, how many sold below list, at list, above list for new construction too. And we look at that and compare it with the weeks prior, and then we compare these numbers that I just pulled right now with the prior weeks to see where we're at, because we're trying to find out and catch when that bubble is going to burst, which means you're at the bottom. That's usually what it means. Okay, but how do you know when you're at bottom? When you start going back up. All right, so, we've been seeing a little bit of this, so we don't know if we've hit bottom yet, but that's why we do this show every week. Now, before we get to the charts, let's look at those interest rates, because they've been coming down for a few weeks here, and let's see what they did this last week. Okay, for that I go to the site Mortgage News Daily, and where they update daily on the sites, and here we are looking at the conventional rates. And something that I'm doing a little different now, I started doing, is I'm showing what the rate was last year at this time. So, and give you the comparison. Okay, so here we are. We ended up at 6.5, and look at those red arrows. We got more red arrows than green, so that means a higher rate with this. So it's definitely gone up some. All right, let's take a look at that FHA, which is usually less. And the FHA now has hit over 6. Remember last week, FHA and VA was playing around near that 6 mark, but didn't hit it, but then went over. But man, look at last year, huh? 2.88 at this time. And now we're at 6.1. And let's look at that VA. And the VA, same thing, it follows suit there. You see where it was in the 5s. It was touching 6, like we said last week. And then ended up 6.15 today, and last year at this time it was 3.01, just over. All right, when you look at those rates that were in the 2s, some people thought that was normal because they got used to it for a year and a half, but I don't think you'll see that again. You might, but I bet it's going to be a long, long time before we ever see that. That was historic and wasn't normal. Okay, now let's take a look at the price per square foot is what we want to see now on these homes. Okay, here we are with the price per square foot, and it has stayed plateaued there at 192, which is still up there. That's still quite a bit. And then if you look over here, the inventory, look at that slope, that it kind of has tapered off. It was coming up, but it's kind of tapered off. Now, the inventory tapering off, not going up, okay, so some people aren't putting their homes on the market, they're holding back, and there's all kinds of reasons for it. Some maybe not thinking they're going to get what they want. Others don't want to buy something else and pay the higher rate, for something else, especially if they just want to go to a different area but want to keep the same size house, or need to move up to a larger house and they're holding off to see what these rates do and all that. Now, we just saw the rates go up and they've been going down for a while. Remember, they were over 7, okay? So we're still down. In fact, I forgot to do it, okay, because now we're at the end of the year. Remember, I said every week, here these last couple weeks, I'm saying it, these people were telling me months ago at the end of the year it was going to be 8%. That's right, 8%. Don't buy nothing. It's going to be 8%. Well, we're at the end of the year, and 6% is far from 8%, especially when we were at 7 earlier. And you know what? Let's look at a headline. Here we are. The 2003 housing market. Okay, now this article is dated December 28th, so it's pretty current. A real estate reckoning is at hand. Okay, economists and other housing experts predict the market will be more balanced among buyers and sellers. And that's going into 2023. And home prices won't change much, while mortgage interest rates will continue to dip. Okay, obviously they wrote this while they were going up here a little bit, but they still have dipped from, like I said, when they were over 7. All right, remember that how I showed the inventory sloping off? All right, it was going like this, going like this. Now it made that curve like this. This is something we've got to watch. And also rentals really haven't gone down much. Yeah, maybe a little bit. Remember, I don't know, a few weeks ago or a month or so ago when, you know, the hysteria was like, rental prices are collapsing, this and that. And then I showed you, yeah, they're going down. They're going like $20, $50 a month. Big deal if you're paying $1,500 a month for a 1-1. What the heck is that $50 going to do you? So anyhow, you know, we've got to watch all that. But if the rates keep going down, now I have seen articles there saying that next year, look for rates being between 5 and 6. I know the people that told me they were going to be 8 at the end of the year say they're going to be at 10 next year. You know, we don't know. That's why I do this show every week and we look at the real numbers. I don't know what they're going to be. I'm just showing you, and then you figure out, you know, okay, what should I do in a situation like this? You know, but, you know, what I'm saying is if that inventory goes like this and the new construction, you know, the builders are supposedly building less, although I see a lot going on, but I think they're from existing permits. But what's going to happen if that inventory goes like that or even starts to dip and the interest rates come down? What happens? Well, I don't know if it's going to be like it was last year, but there's going to be an uptick. And I'm telling you, this week I've been seeing an uptick. I mean, I've got more showings than I have. The showings are up. More interest now in people looking to buy, people looking to trying to get pre-approved for a loan. I'm seeing more activity, you know, already this week. So, you know, I don't know. You know, I'm just watching it along with you. Let's look at another article. Okay, home prices eroded further in October. Okay? When you see that headline, what are you thinking? Okay? You know, you're part of the group that's saying, I told you they're eroding, the home prices are eroding. Now keep in mind with real estate, a lot of these like statistics and stuff are like they lag months behind. You know, next month we'll get the November. But that thing there, home prices, you know, are on a decline here in October. It's like, all right, that's a scary head. We told you they're heading down, everything. And I've been showing you in some of those homes of the week how much less than list. But still, we see how much more a lot of these people made than what they paid for it. So, you know, a lot of people didn't hurt from it. But that headline right there, it's a scary headline. It's telling you it's going down. Yeah, you know, I'm holding off, I ain't buying. But let's read into the article. Okay, as you can see here, what they're talking about is that they're looking at these numbers and they're saying that the prices rose 9.2% year over year in October compared to 10.7% increase the previous month. It's less of an increase from 10 to 9 there, basically about 1 from September year over year, okay, from last year. But it's a decrease from the increase, but it's still an increase. I mean, it didn't go, you know, prices didn't all drop. They're still showing that they're still increased from last year, according to this, okay? Want to see something else that's even more dramatic? Look further into the article here. Some cities still show exceptional annual growth. Miami led the way with a 21% year-over-year price increase, followed by Tampa with a 20.5% increase. All right, now, they didn't show Jacksonville, so I don't know what that is. But those two here are in Florida, Miami and Tampa, and look at those dramatic increases way above what that other was. So prices are still up there, as we saw in the price per square foot, 192. It's still high. So, you know, people are still coming to Florida. I mean, businesses are relocating. Who knows, after all this snow I saw on the news up north, there's probably a lot of people said, you know what, I've had it with this snow. You know, hey Tom, what do you got in North Florida? You know, I'm coming down there, can you meet me? I can hear the phone ringing now, and I'm here for you, I'm here for you. All right, now let's start putting those numbers that we had into these charts and see what we got. All right, here we are with week 33. Active 6796. That's less than the week before and a few weeks. Look back there. That's our lowest. You know, that chart there showed kind of a curve. That was just for Jacksonville itself, where these numbers here are for all Northeast Florida, the Jacksonville Metro, which includes other counties other than Duval. All right, sold 409, and an even 100 less than last week, but last week was a pretty good jump from those previous weeks. Look at this, when we were in the, like, week 27, 302, then it jumped into the fours, then we were in the threes again, 383, 333, 380. So 409, okay, isn't bad at all when you're looking at these other numbers from these previous weeks. We just had that spike last week. Contingent taking back up, okay, that's a drop, 466, and excuse me, that's a pretty good drop from what we've been seeing. Pending, 370, another pretty steep drop right there, okay. Whoops, forgot to put the yellow in there. All right, and here is what I started doing last week, total under contract. Between those, that's because remember, contingent taken back up and the pending are all what are under contract. So I just wanted to see, you know, how many, because they kind of, some would go up and down, you know, pending a little more or less and contingent taken back up and whatever. So I wanted to kind of track the total. I thought would give us a better view of what's going on. So that's what this number is. And as you can see, we've got a pretty good drop there. Now, is it because it's December? All right, at the end, when everything's slower anyhow, we don't know. And again, remember a lot of these numbers, you know, people went under contract and stuff like anywhere from 2 weeks to 6 weeks or more. So there's a lot that go under contract, you know, say like 30 days ago and 2 weeks, especially the cash deals are usually 2 weeks. All right, the withdrawn, okay, 69 people withdrew, so a lot less people withdrew than these other periods, okay? Now, I mean, it could be because, you know, we turned the corner with you know, Christmas now, and people are like, okay, you know, we don't need to withdraw. We don't know that. We'll see next week what if that, you know, plays out. Expired. 175, about the same. New homes sold, that's an uptick. And for over the last few weeks, okay, we've been gradually seeing it go back up, homes sold. And then you've got the new homes that are active, 1834. That's exactly the same as the week before. Imagine that, you know. And then if you look at the other number from last week, 134 and 143, we just flipped the 3 and the 4. Now, remember these new homes that are sold, a lot of those were under contract a long time ago. But remember again, Jacksonville's #1 in the nation for people pulling the plug on those pending jobs and forfeiting their deposit because, you know, it's just ain't worth it with the interest rates. They're trying to figure it out. Even though that new home is now less than what it would have been last year with lower rates. So you would have to compare both to see. And just because you're getting a lower rate, that doesn't always mean you get the best deal. That's why you really have to talk to, you know, a good loan originator to see what the whole deal is, the whole package. But I'll tell you, some of these, as far as rates go, these new home builders have been buying down rates for customers So that some of them, even though the rate says 6%, they've been buying down rates probably around the 3 or 4% range for them for 1, 2, or 3 years, depending on what deal they got. But you've got to look at everything. You got to look at all the costs. How much are those builders giving you in closing costs, and see all that credits. So it's a lot more than just the price of the house that figures into this, and that could be what's causing these numbers to creep up, because these new builders are giving great deals. And again, I'm telling you, if you're thinking about new construction, you see something up here in northeast Florida, the Jacksonville metro area like that, before you go to a model home or you call and talk to a builder rep, you need to call me first and do that, because there's a good chance I can even get you some more money at closing towards those closing costs and prepaids. Not all the time, but sometimes I can, but why take the chance and throw some money out the window, hundreds or thousands of dollars. All right, let's go look at some more numbers. I think we'll look at the foreclosure numbers. Okay, here we are. We're looking week 33, and we've got foreclosures 17, pre-foreclosures 14, short sales 9, for a total of 40. We're pretty close there, but that difference between 36 and 40 is 11%. So there's the headline for excuse me, foreclosures up 11%. All right, look at that. I mean, out of all the homes that are active, it's only 40 of them are in the status of foreclosure, pre-foreclosure, and short sale. All right, let's look at some more numbers here and see how people paid for these homes. Okay, week 33, cash. 21% of the people paid with cash. I don't know why the percentage thing didn't come out on this. That's strange. It didn't do it on week 31 either. All right, well anyhow, 21% paid with cash, so that's down from 27%. That's quite a dip. We went up with conventionals. FHAs took a nice jump to 17, but the VAs fell down, and then others were at 5%. All right, the cash deals. Could that be from, we're seeing some of the investors with the cash holding back right now, okay? Because that's a little scary right now if you're one of those guys that want to flip something, and you're taking a big risk right now. Same way if it's somebody that doesn't plan on staying in their house more than a year or two. So we see that. Now we saw a dip in that VA, but up in the FHA. Well, I'll tell you what, the FHA has come out with some plans here that where it's like 0 down. Okay, see, the VA always had the 0 down, and it was a big thing, and the rates. But as you saw when I did the interest rates, those FHA rates were actually lower than the VA. And if you're able to get a 0 down, you may be better off going with the FHA versus the VA, okay? Where, like the VA has the VA funding fees attached. So that could be the uptick we're seeing with that program that came out. Now, I'm not a loan originator, so I'm not going over what it all is and like that. If you get with me, I'll send you the information that the people that do the loans sent me, and I can send that to you. But it's a good deal for a lot of people right now to get in with the 0 down. All right, let's look at some more numbers here. All right, here we are, week 33. Homes that sold for $500,000 and above, 24% of the homes sold were in that price range, and that has dropped from the previous week. Now, homes that sold under list, 71%, about the same. Homes that sold at list, 17%. And homes that sold above list, 12%. So, with the exception of the homes that sold for above, everything's pretty close, just one percentage off here and there. Okay, now let's take a look at the new construction homes that sold below list, at list, and above list. Okay, homes that sold under list, new construction, 57%. A little more than last week, but the same as week 31. Homes that sold at list, 20%. And homes that sold above list, 23%, down a little bit. All right, I mean, it's still good. I mean, like I said, the new construction's got all those deals out there, and they have been dropping their prices. So it's something to consider. You know, if you're looking for a house, you know, new house, everything's under warranty. You know, there are some good deals out there. A lot of people don't think so. They think anything over 200,000 isn't a good deal. So it's like, oh well, you know. But that's what drives those 500 plus numbers up a lot too, is because a lot of these new construction and some of these master plan communities are like $500,000, $600,000, $700,000 homes. And then the price, where you see the prices above list still, that's because some of these homes could have been a year ago that they were started, and you know, inflation just caused the building materials to skyrocket, and so that's why those houses, you know, they may have went on the market there like, you know, last year, but they're closing now. But that time frame for a whole year, you know, I mean, it did increase, and that could be an increase of $1,000, $5,000, whatever. I just go by what's above list price. I don't break it down into thousands or anything like that, just to try to keep it simple here. All right, it's time. House of the week. Okay, here we are for this house of the week. Down here, you can see at the bottom here, this is what the price, the original list price was, $410,000. What I'm showing here is, I'm showing it a little bit different here. I'm showing as they drop the prices, okay? Now, so 410 they started off with, and this house, when you look here at the top there, okay, it was days on the market, ended up at 121, okay? Now, as you see, these price decreases that went along, and it ended up selling for $325,000. Holy cow! A house between $300,000 and $400,000 with a price drop of $85,000. That's a headline, okay? All right, now what we need to do is to see what this house, what the previous people bought it for and what they sold it for, okay? And let's see whether they got a deal, whether they got hurt, or what in this market crash that we're supposedly in. All right, let's check it out. Okay, as you can see, the last time this house was bought in June of this year for $362,800. Okay, and it sold for $325,000. All right. Even a fifth grader can figure that out, that they took a loss. But I'll tell you, it's even worse than that, because they gave $5,000 in concessions also. Okay, so you know, it was actually worse than that. Now, this house is interesting. When I looked at it, I saw, okay, beating, but then I always like to look when I see a house that was bought this year like that. All right, it was one of those investment companies that buys houses, and then they turn around and, you know, fix them up a little bit and resell them, you know, for a slight profit. And timing's everything. They got caught in that timing. See, now May is when things were turning, okay? Now, they got this in June, so just as things were turning, so they thought that they had bought it low enough that they could, okay, let's put it at 410. Even if we get like about 375, 380, we can still make it, because they still take fees, okay, when they buy them from the sellers. So it didn't happen. It was on the market for what, like 121 days ago. But let's look back, okay, before that investor bought it this year, the previous owner, what they had bought it for. Okay, this is interesting. This house was bought new, so they bought this, the investors bought it from the original owner. They bought this house new December 2016, so exactly 6 years ago. And they paid $200,000 for it, okay? Now, had they kept this house, okay, and not now, they actually did good selling it to the investor in June, but let's just say the investor never was there, and they ended up putting it up and selling the house, and then had to sell it, and went on the market, ended up selling it for $325,000. All right, they paid $200,000, okay, 6 years ago, and they're selling it for $325,000. All right, if they did, theoretically. So let's look at the appreciation calculator and see what that comes out to. Because remember, normal appreciation was like 5 to 6%, but I show 6% just on the high side just to see. Let's see what that 6% appreciation would have been if they had sold the house for $325 themselves here exactly 6 years later. Okay, there we are, $200,000 at a 6% rate for 6 years. That comes up to $283,700. So if everything was normal and we didn't have that year and a half to 2 years where things were on their head with these massive appreciations, then they could have expected to sell their house for $283,700 or so. And it turns out even $325 would have been a great deal. My point is being that people that didn't buy this year that have bought past, we saw some, actually I think we even had one, there were people bought at the beginning of the year and still sold and still did good because of the appreciation. But it's in this 1 year, 2 year, which most people don't. Okay, I know there's an exception, but most people don't. They're doing okay, even though we're in a downturn right now where the prices are going down and the interest rates going up and the buyers are slowing down. But they still would have done okay had to do it. That's my point. So here you go. You got the real numbers here that I'm showing you, and for you to decide what you're going to do to buy or sell. So until then, until next year, Happy New Year.